Hello, mortgage broker community. We are sorry that we're getting started a little late today. We have Kevin Peranio, Chief Lending Officer of PRMG, joining us. KP, how are you?
Good. Can you hear me okay?
Yes, we can hear
All right,
you.
good.
Great.
Good to see you.
Great to see you. So, KP, we'll get started. Big news of the week, obviously. Quicken Loans filed for their IPO. What are your thoughts about this move? This is obviously the first major non-bank lender to go down this route. Where do you think this goes?
Well, this is one man's opinion, and I think it probably aligns a lot with the broker channel and most local mortgage experts. Before COVID-19 hit, we were all talking about fintech disruption and what's a threat to our business, and this is a sign to me. This IPO, again, Zillow doing more iBuying, restarting in certain markets. That was also announced this week, that fintech is back. They're back. These centralized locations are back to come into our communities and come in and try and take our business and compete against us. Now, I feel we're armed better on a local level to win. And I think that will always resonate well with the first-time home buyer. There's nothing better than a local mortgage expert, just flat out. There's no way some little dude on a headset in Detroit, is going to beat out someone that's been in the community for 5, 10, 15, 20 years, plus has the relationship with the local real estate agent. Having said that, they have 9.5% market share. They use algorithms, they use technology, they find ways to get in front of eyeballs before we ever get a chance to get to them. And so there's a little bit of an unfair fight. So fintech disruption is back, and this is a clear sign of it.
I was talking to Brian Biden this morning. We were having a conversation about this whole subject. There's a little inside joke here with KP, but we were talking a little bit about the whole element of how does a consumer find a mortgage representative, whether it's a retail LO or a mortgage broker. At the end of the day, we're all local loan originators. So how do they actually find them? And we both said that they find them through referrals. That's really how they find them. It's like a friend of a friend, a realtor, a financial advisor. So the thing is, you can't go on any website. I mean, obviously we have findamortgagebroker.com, but you can't really go on any website and find that local guy, because Quicken's going to be top of funnel. They're going to be at the top of Google. They're going to be at the top of all these places. So, this kind of emphasizes this narrative that you've dominated at over the last year. And I personally want to take credit for it, because it's been ever since AIM Fuse that you've been posting on social every day. You've been dominating social. Talk to your loan originators, talk to your account executives. How important is that for the loan originators to stay in front of their customers and to also stay in front of potential customers that don't even know who they are yet?
Yeah, we've talked about here, and I was on Housing Wire Engage marketing panel a couple seems like forever ago. You have to take the traditional originator that gets their loans, their purchase leads, from a real estate agent, and goes out and beats the streets, deepens those relationships, and that's healthy. Don't ignore that. In fact, please don't ignore that in the middle of this refi boom. But we have to create, you and I, as leaders, we have to create a path to pivot to more consumer facing activity, right? So, whether it's, you see guys like, Grant, the mortgage broker on TikTok, right? Someone's cracking that code on TikTok, whether it's spending a little bit of money, on advertising on Facebook. Jason Frazier used to talk about $2 a day, as a campaign. These little things that you can try. We have a project we're working on called Homeowner Now. That's another way to do it. So, there are ways for us to get out in front where the eyeball's at. And remember, the first-time home buyer is 33. So, the average age of the originator is still, low 50s. And so I don't think the gap is, that big of a deal, especially as leaders like you and us and other leaders in the channel. We create the path to pivot and do more consumer-facing stuff. Right now, everyone is literally spearing loans out of the sky. Refinances are just falling everywhere. It's super easy. But when it goes back to a grinded-out battle, that ground game, that blocking and tackling, we've got to make sure we're doing consumer-facing activity, because that's where the eyeballs are at. People are looking at 9 to 10 different places online before they finally click. All right, talk to me, call me. Are they seeing us? Are they seeing us at all? Are they seeing us? If they don't see us, we're invisible and we've lost the battle. And so there's an abundance of business out there. There's an abundance of ways to go out there and market. And as all of us are building our war chests, we're building our coffers because we're doing a bunch of refinances. We have to reinvest in ourselves, at least 10% of what you make. Reinvest in yourselves, whether it's in marketing or education on marketing or education on anything. You've got to reinvest 10% of what you make, because that's how you scale. That's how you build. I love what you said this morning. Like, everyone's saying they're having their best year. Well, yeah, everyone's having their best year. Of course, loans are falling out of the sky. That's par, right? Yeah. But next year, the year after, when it's not as refi heavy, how are we going to find that ground game? How are we going to get out in front of a company that's about to raise a few $1 billion and go out and be everywhere? I mean, I watched the PGA tournament and I loved it. And I love the fact that company gave back to Detroit. My in-laws are from there. But God, I'm so sick of seeing rocket commercials every single commercial break. Go back to watching Bryson DeChambeau smash the drive. I'm sick of seeing this. You think that's it? When they raise billions of dollars, we're going to see a lot more of them. So, it's just, it's a competition and we got to beat them.
I think that's the important thing. One of the things that I get very frustrated about is I'll have brokers or LOs say, oh, Quicken's not my competition. I could beat them any day of the week. And what I try to express is that you can't compete against a competitor that's getting to the client before you ever have an opportunity to compete. So yes, if a customer that has a quote from Quicken or is shopping you against Quicken comes to you, are you going to be able to win? Of course. That's a no-brainer.
If you see it.
You see it all day long. But
no, if you get the loan, you may not get a shot.
But here's the thing is if they make it, if they're top of funnel, 1 out of every 15 consumers is shopping their loan with Quicken. Okay. So if they go to Quicken first and they never make it to you, they're never referred to you, they're never in a position of competing, guess what? They've won. So to me, it's just one of those things that the things that they're doing, the American Express deal where they had a special deal on their credit, on the people's mortgage or their monthly statement, State Farm deal, the Charles Schwab deal, this PGA tournament, the NCAA championship, the consumer sees that. They call in, they go to the website, they go to Quicken first. They never make it to the local loan originator. That's why it's so important that we do our job and we stay in front of consumers.
There's a stat that I bring up is that if a borrower shops even 2 places, if they even shop 2 places, if you're one of the first or second originators to speak to that borrower, your win ratio is 88%. That's all. I mean, that's almost 9 out of 10 times. Just being first or second. If you're first, it's approaching 60. It's in that 60% range. And so speed to lead is very critical. And let's be fair. I mean, they're a fantastically run company. They're a great lender. They have a mindset where they also have consumer direct and they also feed the portfolio and they think about that. And that doesn't align with every single originator out there. I mean, I'm not trying to shit on them as a company because they're a very well-run company and I have a lot of respect for them. But they're also our competitor, right? And so anyone that's ever played any kind of sport whatsoever, there's teams out there that they're good and you got to bring your A game against them. They're one of them. They have 9.5% market share. If your client that's in your prospect funnel called their 800 number, do you think they're going to give you that lead? Of course not.
No,
of course not.
Absolutely not.
And look, it goes for retail lenders as well, right? I have to square that line as well. We have a retail channel, but for us, we feel that all local originators are all on the same team because they're all fighting against that fintech disruption, that consumer direct coming into your community and taking a loan back to a centralized location in Detroit or Seattle, if it's a fintech company, that they're coming in there and they're taking our local business. Now, look, I don't want to speak out of both sides of my mouth. There's an abundance of business out there, right?
Yep.
But it's a competition. We all want to win here. We don't like losing. We want to win every deal. And so, are we helping our competition or are we hurting them? And so, look, everyone's got to square all those things, in their own mind. But we have to be where the eyeballs are at. And they are definitely on social media. They are definitely looking at websites. They are definitely on different places where we aren't necessarily. I mean, I love how you promote guys like, Andrew Pollack and Lead Pops. And you're literally handing the broker community, what I think is one of the best websites, if not the very best website. Here's your own local Rocket Mortgage. Get to the consumer first. Here's the tools. I think they do a better job than Rocket personally. And what's great is they do it for less money, because then they can just do a cross-query Google search, against a Rocket lead. And so you're literally, the AIM community is being armed with better tools to fight, better points of sale, better tools, better technology out there in front of it. So it's just whether you want to take advantage of it or not. And so anyway, good for them. It's a great one, very well-run company. They're going to have a smashing IPO for sure. And, it's game on. There's just more competition.
Yeah, I think that's the biggest thing, is that the mindset of understanding who your competition is. At the end of the day, as a local loan originator, some people get, obsessed about, the in-house mortgage guy at the local realtor. But the truth of the matter is, when one participant has 10% of the market and 1 out of every 15 customers is having their credit pulled by that company, that's the 10,000 pound elephant. Like that is the biggest competitor. And this move is we're going for world domination move. They're not going out and raising billions of dollars so Dan Gilbert can take chips off the table. They're doing this for the sole purpose of trying to, take over. And I think the most important thing for brokers to understand and loan originators to understand is right now, you might look at adoption of technology. You might look at things like lead pops or HomeBot or different elements of things that you could be implementing in your business to stay front and center in front of your consumers, or working with true partner lenders that are keeping your customers in front of you. As it's optional. It's not. It's mandatory. It's the fundamentals. And we saw last week, Tom Mancuso, loan originator from Nexa, he posted in our Brokers Are Better group a letter that his customer received from PRMG, and he brokered a deal through the wholesale division, closed it, and basically that customer had a inquiry on their credit report. And PRMG actually sent a letter to the customer saying, "Hey, listen, just so you know, we see that you might be shopping around for a mortgage. Your mortgage broker is Tom Mancuso. We'd like to put you back in touch with him." It was, that's a demonstration of the partnership elements of everything we've been working on from Brawl to now. So talk a little bit about the technology and some of the things that you've put in place to make that happen.
For sure. So, we've been around since 2001. I've been in the industry since 2001. I started as a wholesale account executive, and so I get it. I mean, I one thing where you and I aligned on our initial call was, that client belongs to that originator. That's the originator's relationship. We have a servicing portfolio here. We have a portfolio here. We also sell loans to other people. But regardless of that, we view that as the originator's relationship. You did all the hard work to find that person, speak to them, serve them and their family and the community, your community. That's your client for life, forever. So long before Brawl existed, or most of the companies that didn't exist in 2008, we've been a servicer, and we've always, for loans that we service, for sure, whenever we got the loan call, the question, or hey, I want to do a refinance, or I need a payoff, we've always given that information back to the originator, regardless of channel. So what's great is about 2 years ago, some really good technology like Sales Boomerang. If you ever see Alex Kutsishin out there with Sales Boomerang, we do a lot of work with them. We monitor triggers for loans in our portfolio. Now, if a loan happens to be sold off, which lately we've been selling much, much less off, almost 100% service retained in the last 120 days. If a loan's sold off, we can't monitor a credit pull. That's just a fiduciary responsibility. We can't breach that contract for a loan we sell. But we can see if someone listed their home. We can see if there's a life event, death, diamonds, diaper, divorce, downsize, all the Ds, right? We can see if there's an equity alert on the property. And of course, every originator out there has a CRM. I mean, you all are watching your client anyway. And so, it's all a big collective effort to make sure that the borrower gets back. So one good thing that we also just implemented recently is we rolled out FinLocker. So for those of you that have seen Brian View, remember, he ran TPO for Flagstar, made the leap over into FinTech. He's arming us with FinTech. He's arming all of us with FinTech. So we entered into agreement with them a couple months ago. We finally just last week launched our first 1,500 lockers. I think we have 6,500 in this first several phase rollout. We have over 20,000 units in our portfolio now, up from 6,500 back March 1st. And we want to, we use Sinlar as a sub-servicer. And unfortunately, in the servicing realm, technology is not very good. We haven't been able to white label our statements. So here's a way for us to shortcut that now. we're doing way better than white labeling and having all these touch points at servicing. Who wants to have a touch point at servicing? That's usually an angry person anyway. We're giving them a FinLocker. We're calling it the PRMG Data Vault. We've rebranded it. And you're basically handing them this locker, okay, where it combines a bunch of different functionality in there. So right now, you've got all the budgeting functionality like you would see in Mint. You've got all the ability to monitor your credit like you would see in Credit Karma. You have all of the borrower's attributes and past contact, including the originator who originally gave that loan over to PRMG. That contact is in there, front and center. You know how you guys are. You have your websites that you log into daily. You have your websites you log into weekly and monthly. There are consumers out there that love stuff like this, to log into their own financial locker and take control of their own data, their own life, their own being. And oh, by the way, one awesome thing that FinLocker did, they have a great partnership with Fannie and Freddie. They have perpetual DU, the ability that's being enhanced inside that locker, where it can constantly run DU and see if a borrower qualifies. So now you have a trigger and the ability to basically run DU when you're not looking, which we'll get into this a little later, but I can't tell you how many files we get in registration that don't even have findings. Well, shit, FinLocker's running the findings for you, and then they send you back the loan when it's qualified. So another thing on the roadmap is for the borrower to be able to make their payment through the FinLocker for their mortgage payment. Once that gets dialed in, this is the stickiest, most golden thing ever. And it's our fintech. It's for us, the originator, the local originator. So we rolled that out. We're super pumped about it. I love the fact that you got someone that literally ran a TPO channel at Flagstar, someone that I've struck up a great relationship with over the last couple of years. And now he's flipped over to the fintech side, and he's fighting for us. This is our fintech. Yeah. And so I just think it's a fantastic thing. And that's another thing that we've rolled out, in addition to Sales Boomerang and the letters that you've mentioned on behalf of the gentleman at Nexa.
Yeah, and that's part of the. I would say, Brian was one of the early people that I spoke to once I started the Brawl movement, and fundamentally at that time, he didn't know he was going to go to FinLocker. He didn't know his the career path, but he did believe in the concept of the broker or the loan originator having this this sticky long-term life, like annuitized relationship with the consumer, where that's their, you got your doctor, you got your plumber, you got your mortgage guy, and it's sticky. So with FinLocker, really, we, obviously through AIM, we have a partnership for the broker community. Through Vetted VA, there's a partnership with FinLocker through that for brokers as well. And the whole goal here is, you're putting the consumer in a position where they're centralizing their data. They're able to, have their EVOA, their electronic verification of asset, they have their tax returns, their W-2s, everything in one nice package place. And when it's time to do a mortgage, you don't have to gather all that stuff. You're already running the DU like KP discussed, and you can have more of an instant approval process. So, for us, we look at that as a long-term play. It all kind of goes into this whole customer for life strategy, where if the broker has their customers in that, and our partner lenders are extending that offering to brokers for their past customers, the likelihood that the broker loan originator is going to be able to stay in front of their customer on when all those life events happen is very, very high. I mean, that's what Quicken has done. That's what the fintech companies are hoping to do. And we think it's a long-term success play for the broker community.
And the thing is, I want to make sure people understand, you can buy this. Anyone of you, like, whether it's Evan Wade at Epic, Philadelphia Mortgage Broker PMB, or, whether it's Paul Apostolakis over there at Omega, they have the Omega Vault, right? Chris Griffith over there, Debt Does Deals. They're all participating. They've all bought lockers, and they're sending it to their clients. So you can do this too. So what if you send a loan to us and we send an invite, but then you also send an invite? Great, you double hit them. I mean, that's a great problem to have. Okay, who wants to get the locker? They want them both. Great, you can have it. We don't care. Like, we just want to make sure the clients have the tools, the fintech tools, to fight the billions upon billions, and now even more billions, that are fighting against us to take our local business away from us. So I love the fact that there are tools out there, that there are, companies out there that are building fintech for us. We feel like the little guy. It's crazy. It's like, we're doing great. Everyone's setting records. People look at us, and I guess because I ramble at the end of the night, 1, 2 in the morning on LinkedIn 4 or 5 times a week. People think we're bigger than we are. We don't feel big. We feel like we're fighting side by side. We're running for our lives. We're running to make sure that what happened in the cell phone industry doesn't happen here. So, whether you have a crappy iPhone or if you have the dominant Android platform, there's only two platforms. And so my point is, like, things could really slow down here in our business. There could be 30, 20, 10 lenders left. So who's fighting for us? You've got great lenders like UWM, who in my opinion have built the best and fastest mousetrap out there. Their technology and their ease of use. I mean, they could easily turn around and face that to the consumer and dominate Rocket Mortgage. But they're so committed to the broker that they've given that fintech, which is best in class, to you. So my point is, there are players out there that have committed to the local originator and committed their technology and their investment. And I love what you said, earlier about Ramon Walker. He's one of the best out there. I shot him a note the other day. He's building and developing Salesforce. I mean, that's as good as it gets when it comes to a CRM. If you want to take that time to do that and develop your own custom thing, there are tools for us to go out there and scale and build and win local, but also defeat the fintech disruption.
Yeah, and I think on that front, it's not just, so some people think when they think about technology, they think it's this big crazy thing, and we're in the process of here at AIM developing our own CRM, our own Salesforce environment, and it's just the most basic things that you need it for. Your follow-up campaigns that go out to say happy birthday to people, or your check-ins with people that you haven't talked to in a while. It's the basics, but it's customized to you, and it really goes to this whole investing and building. Like, I look at 2020 and like everybody's pounding their chest about how great of a year they're having. And I'm like, that it's like a participation trophy. If everybody's winning, it's not hard. Like, yeah, great. Like, it's like being the tallest midget. Like, that's not the goal. The goal is to win in 2021, 2022, and 2023. But the only way to do that is if you're investing and building your company. And the example that I gave with Ramon is, Ramon's sitting there at 9:00 at night, and he's working all day processing loans and getting loans closed and dealing with the normal rise and grind of the mortgage business. But at nighttime, he's having meetings with his Salesforce developers. He's focusing on putting himself in a position where he can win in 2021 or 2022. And it's easy to sit here and just like take all the money in and just like say it's going to last forever. But we saw what happened in 2016 after the election. You remember what happened. 10-year Treasury went through the roof, and there's, we don't know what's going to happen this year with the election. Anything can happen. We like to believe what Barry's saying, what Fannie and Freddie's saying, but rates can change really quickly. It's unpredictable.
It really is. And I'll just one last thing about Ramon. At the end of the week, he's got just one little sip of 1942. Just to celebrate. You do have to celebrate the wins for our own sanity. You have to celebrate your victories. But it's a grind right now. It's like, you set these goals for yourself and your company, and you hit them, and then you're like, okay, what's next? It's just relentless pursuit of continuous progress. It's like you don't get you know what? The reality is, until we either drop dead at our desk or we retire, when are we going to sit back and go, you know what? I'm happy with what I did. I'm finally happy with what I did. The second you get complacent, there's someone else hungry right behind you who's coming in and snatch your business. Right. So it's a crazy business, and we're nuts to be in it. You bring up some really big points, and I want to make sure people understand, and I do want to face the music and make sure that we own is ownership. People don't know I'm one of the four partners here. We have two founders, Paul Rosso and Robert Holiday, who were originators. We're built by originators for originators, not built by the hedge fund, not built by the bank, not built for ROI, not built for the portfolio. We're here to serve originators. That's what we do. But we're going to take ownership here, including Gary Malice. He's also our fourth partner here. We're going to take ownership for things that we failed to do. We failed to scale this company and get things at a level where they need to be. I read every single broker survey that comes through. I saw one from a gentleman named Michael Cruz today, and he said, there's not a spot on your survey to talk about ownership. And so I just want to let you know that you as ownership, you have failed as a company. You failed, and I want you to know that. And he's right. Like, we're setting records, we're doing great, but we're not happy. We can't pat each other on the back. I have to hire 50 underwriters by Friday, and the thing is, it's not going to be enough. It won't be enough. And so what's interesting is, we're trying to grow, we're trying to scale. Our company is going to double this year. Our TPO channels are growing as well. Wholesale's 250% ahead of last year. So, we're doing our part. We're more than doubled this year. We have 250% in our TPO channel, specifically wholesale. So we're trying to grow. We're growing all channels. We're growing as a company. You cannot hire fast enough. And so I want people to understand the three big things that are going to happen here coming up. Okay. So we made a strategic decision as a company to put out a good rate. And up until about 2 weeks ago, our rates were some of the best in the industry. And the reason we did that is because we've been here before. We know that this will go away overnight. There are $6.5 trillion of tappable equity out there. There are $5 trillion in loans eligible for refinance. Okay, not equity, just straight up rate and term. That number, when the MBS went up as much as it did, if you watch Barry Habib's MBS Highway and you look at the ticker, what happened yesterday? Record. Yep. Highest price ever for a mortgage-backed security. Go look at the 2.5 graph. Ever. I've only been in this business since 2001. So rates are the best they've ever been in the history of all time. Now, here's where experience matters, okay? We know that we can find a cure tomorrow. We know that
a cure to COVID, not to turn.
Oh, yeah, for sure. Yeah, a cure to Corona. Yeah, there's no. Yeah, my fingers get underwriting, right? So look, I mean, we made a decision not to create an assembly line underwriting and go after a certain type of product. We still do down payment assistance programs. We still do low FICO. We do manual underwrites. We're still here to serve the community. We've made that choice. So we're not like other lenders. We've made that choice and we're sticking to it. We didn't get afraid of all these lenders that are doing that route and then decide, okay, we're a non-QM lender tomorrow. And look what happened to them. They're suffering. We've gone 10x on our model, which is we're a local service-based decentralized fulfillment team here to serve the local originator no matter where you are. And that includes doing deals that are hard to do. Second liens, jumbos. We still do stuff that's tough today. Could we eliminate all that and just do refis over 680? Yeah, we could do that. But we chose not to do that. We also chose to put out a good price. And here's why. If there's a cure to coronavirus or a treatment or a vaccine, or it just dies, it goes away like the swine flu did or like the other coronaviruses did, that it just went away, right? If it just goes away, or job growth is there, or whatever happens in the election, something's going to happen where in a span of about 1 to 3 days, 35% of your refinances in your pipeline are dead. Okay? So I just want everyone to understand that is going to happen. If you don't lock your loans, something is going to happen. I don't know when it's going to happen. I don't have a crystal ball. I know the election is a very scary point. I actually, you know how it is. Typically, if a Democrat, regardless of person, party, anytime, any election, if a Democrat gets elected, you see that's less business friendly. There's more regulation coming. The stock market crashes and everything goes to bonds. It's actually typically friendly for mortgage rates. Maybe it won't be because we're in a fake market with the Fed. Or if the cure comes, who knows what's going to happen. But my point is something is going to happen. And if you are floating locks, I don't know when it's going to happen. It happened in 2003 in July. It happened overnight, and Capital Commerce went out of business. And they
taper tantrum.
It just, thankfully you all can be rest assured that when we commit to you on our rate sheet, a rate, you're going to get it, because Gary Malice and his capital markets team, they've been there, they've done that. They know how to do this. He was one of the partners of First Magnus, one of the greatest stories of privately owned lenders out there, both wholesale and retail. But my point is, it's going to happen. Something is going to happen, and rates are going to change overnight. Will it be this year? Will it be next year? Will it be in 2 years? I don't know. But at some point, 25, 35% of your pipeline will die because the rate no longer exists. And so we've made a decision as a company. Look, we're at 45 days on our East Coast. We're at a week on our Northern California team. We're at 2 weeks on our Southern California team. We have different turn times. You can go to the AIM broker page and you can see what the turn times are. But we know that if the market turned, you would be so thankful to be waiting for 45 days for a rate that no longer exists, because then you would make zero commission and your borrower would get screwed. And so I just want everyone to understand that will happen. It could happen this month. I don't know. But my point is, overnight, rates can go away, and people would beg to have a 4-month wait turn time, which we don't have. And so we made that decision. And so we're posting our turn times. We're trying to deal with any changes that happen midstream. I know that that's the worst when we tell you it's 2 weeks and then it gets extended to 2.5 or 3. So what we've done here is we've taken a little step back recently on our margin, and now we're putting in a purchase money special. So we want to try and take care of the purchase money special, kind of get a hold of our turn times, get them back to like a week to 2 weeks. If you noticed, our registration turn time is back to 24 hours.
Yep.
So we've got that back in line, which is great. We had gone anywhere from 2 to 3 days. We've been, in return for offering the 24-hour turn. And it sounds silly. I mean, some of you are probably rolling your eyes like, oh my God, I got to wait a day for registration. That's who we are. That's who we are. We are a full one underwriter puts their mind around the whole file, and we'll do tougher stuff for you. That's who we are. We didn't.
Well,
So anyway, in return, we're asking that the brokers put in their AUS findings. So as of July 15th, we're asking that you put AUS findings in so a file can even be registered. You would be surprised that many brokers just send us files and they haven't even run to you or LP. So we got a lot of stuff moving. We're hiring like crazy. We probably hired, 90 operations people in the last 60 to 90 days. We're working, we're scaling, we're growing, we're here to serve, and we're all in this together.
Yeah, and I think the important thing, and this is not a PRMG specific issue. I'm dealing. We handle lender escalation. So, obviously we announced today we've kind of automated to a degree, but we get this from a lot of lenders, and I think the big thing right now is nobody predicted that this was going to be a $2.7 trillion market. Nobody staffed to support a $2.7 trillion market. And the reality of the situation is, although everybody wants, what have you done for me lately? We want turn times as fast as possible. Relatively speaking, everybody's in the same boat. Whether somebody's initial turn time is faster, or their condition turn time is a little bit slower, or their closing process is slower. Somebody has a bottleneck somewhere. And at the end of the day, it really comes down to, this is why loan originators, brokers, we're the experts. It's our job to set expectations. And for me, it's irresponsible for us as loan originators to sit there and take a position of like, hey, AIM's publishing everybody's turn times every week. So full visibility. And I tell everybody, that's where their turn times are today. But if the trend says they're currently at 4 days or 5 days in underwriting, but we know more businesses coming in, we're in the middle of purchase season, that might be 6 days or 7 days in another week, because that's the trend. That's where things are going. If you assume the best case scenario every single time, you're setting yourself up for failure, setting your customer up for bad expectations. We have to take some accountability. And the truth of the matter is, when people do complain, what industry outside the mortgage industry are people making the amount of money that they're making? There's none. We're in the middle of a economic and health shutdown. Everything's getting canceled every day. Everybody's suffering financially, and we're sitting here, having our best years ever. So, at some point we got to have some perspective, and we got to take a step back.
That's that Catholic guilt coming out. That Italian Catholic guilt. It's hard to be this blessed. We're all blessed. We're all so blessed. We have jobs. We're crushing it. I'm not trying to use that as an excuse to have long turn times. I'm just saying, sometimes you just got to have a perspective, and it's a really good point. And you can't drive yourself mad. You literally can have a heart attack at your desk, dealing and focusing on the bad things right now. But how we handle, people's true stripes are coming out right now. Their true colors are coming out. How they handle adversity right now, you're seeing. You're seeing how it is. And so at the end of the day, we're just working our ass through it. All you can do is just, nobody cares. Work harder. Just bust your ass and just keep plowing through that wall.
So let's talk a little bit about the second half of the year. Just get into the outlook a little bit. Obviously rates are low. Everybody's super busy. From a perspective of purchase business, all the markets where the economy's open, the purchase market is thriving, and housing demand is as high as it's been. What advice would you give to loan originators about how they're prioritizing the time they're spending with their realtors, the time that they're doing new appointments with new real estate agents, and they're focusing on the purchase side of it? Because obviously, if everybody wants to stand in their office all day and focus on refis, they could be busy for 24 hours a day. But at the end of the day, as we saw in 2017, when rates go up, you need those realtors. You need that purchase business. And if you don't have a foundation of purchase business, the pain that you're going to feel when rates go up is massive. So what are your thoughts on that?
So purchase business, I had a wholesale executive meeting this morning. Phil Shoemaker and Keith Bilodeau, they chair the committee. It was part of the Mortgage Banker Association. We had Joel Kahn on, who's the MBA chief economist. Pete Mills is on there. He handles all things regarding regulation and lobbying efforts. I mean, purchase business is on the rise. I mean, it is, the floor is set in for $1 trillion in purchase business, and it's only going up from there. And so I honestly think we could see a $3 trillion a year this year. Now, why isn't it 4 or 5? It's all out there for the taking. It's because everyone has their limits, whether it's underwriting capacity or balance sheet. I mean, there's endless business out there. Why do I even have a line of files for 30 days? Why aren't they all going, to my competition? The constricting factor on this business right now, it's not the Fed pumping unlimited money. It's not rates. It's not borrowers. It's not the originators doing a good job of going out and getting deals. It's capacity. So having said that, purchase business is something that has to be prioritized. When you build those relationships with real estate agents or builders or wherever you get them from, we have to protect those relationships. And that comes with not just service levels, but also, helping them do a deal that maybe they couldn't do somewhere else. So I'm just saying, no matter how good things are, no matter how many refinances are falling out of the sky, you have to invest in your marketing. You have to invest in your education. You have to invest in yourself, and you have to invest in continuing to build purchase money referral sources. There are a lot of new realtors that are getting in the game right now. Maybe start with a new realtor and kind of bring them into the fold and kind of have them part of your team. If you talk to 10, maybe 2 or 3 of them become that next, 20 or 30 unit producer per year. And then maybe you get half that business or all. You have to continue to develop these relationships. Purchase business is not going anywhere. I saw a chart yesterday that showed refi business dropping off tremendously next year. And I don't know if that's true or not. It's just an estimate. But I saw a tremendous drop off, considerably lower drop off in purchase business continuing to rise on the chart. I mean, just endlessly. So we're undersupplied. We have the largest demographic, which is Gen Z. Millennials. Millennials are the largest demographic right now. They are the first-time home buyer. Average age is 33. The number of people that turn 33 is larger and larger every year. They're finally leaving the cities with LA and Boston and New York. They're like, screw this COVID-19 stuff. I can do my job anywhere. My company wants me to do my job anywhere. I'm going to move out to the exurbs. 1 in 5 people have moved because of COVID-19 already, and they're mostly younger people. So they're leaving the big cities and they're coming to your community. And so purchase business is on the rise. Builders can't build fast enough. There isn't enough supply. That's going to be the theme going forward. So you have to focus on the purchase business. That means getting out in front of them, being out in social media, doing the advertisement, doing the marketing, having a CRM, finding prospects, buying leads, trying something you never tried before. Buy a website from Lead Pops, hook up with Verse.io, and have them set the leads for you, and then just come to you. Hire a dialer, hire someone out of college that's going to be that next badass at your company. Scale, grow, be committed and intentional about growing your community and your business. You have all this stuff is right there. It's all right there for you to do it. And purchase business is only going to rise from there. So we just have to take ownership and continue to be intentional about building purchase business.
And those tools, I think one of the things that, our team focuses on and continues to focus on that, we get concerned when we don't see the level of adoption on some of these things that really there should be is, we put together this network of vendors that we have essentially worked with very closely to make sure they're customized and built for small businesses, for brokers, for loan originators. Mm-hmm. And, the commitment that we have is we won't do a partnership with any company unless it's a company that we would actually work with. Like, we use Ogvo for our reputation management. We've worked with Lead Pops on landing pages. We literally just signed an agreement with Verse to do our new member follow-up calls because right now we're getting between 100 and 150 new members per week. Can't keep up with those calls. So, they're going to be calling and just, welcoming new members to our organization, talking about our member benefits and stuff like that. Like, we literally use the companies that we partner with. And the reason why is like, you got to walk the walk sometimes. And I think for PRMG, you and I spend a lot of time talking about, how to get, better as a platform, what brokers need, what are the areas that, AIM can be focusing on to support brokers better. And one of the areas that you and I have definitely spent a lot of time on is, Arrive. So, the evolution of the platform, obviously, I think version 1.0 wasn't, up to snuff for sure. I think the new version that's just been announced by the team, Arrive Next, it's had massive adoption. Registrations are going through the roof. And overall, the user experience that I'm seeing getting feedback on is really, really best in class. It's on its way to being the best LOS in the space. What is your technical team said, and what are you seeing on that side of things?
Well, I'm on a Slack channel. I've been on it for the entire time. I watch the development. I'm on a different Slack channel. I see the registrations, and registrations are up and Arrive. It's really good to see that. The team that took it over is fantastic. You've got great leaders within the community that have given tremendous feedback. I love seeing the feedback from everybody on there. Evan's been a big part of that, Evan Wade. So look, Arrive is your chance to have yet another tool. But I think what I like that you have Rene Rodriguez and talking about mindset. He talks about mindset, but I want to talk about entrepreneurial mindset, okay? Because I have trained or spoken to or been the ear and the vent for, dare I say, thousands of small business owners or operators, whether it's a branch manager in a retail channel or whether it's an independently owned operator. And every single one, the common thread, and this goes for account executives, this goes for processors, everybody goes through a process of giving up control, okay? If there's one thing you take away from this whole thing, just take this. Say, you're right. No one is going to do the job that you do better than you. You're right, okay? So having said that, if you're committed to scale, you must recognize that you have your limits, and your limit is time. Now, unless you work 19-hour days and you sleep 4.5 hours a night and don't see your family Monday through Friday, unless you're committed to doing that, which I hope you're not, because trust me, unless you're a robot, you don't want that kind of imbalance in your life. So my point is, you cannot get time back. So you are all afforded the opportunity to scale right now. You have to delegate. You have to understand that if you hire someone that's 60% as good as you are, you're going to get lift, and that's okay.
Well, I think that actually, just a quick correction, like I think that's the problem that I see, the common issue with entrepreneurs is they think that they can hire somebody to do 60%. The way I personally view hiring is you want to hire somebody that can do 5%, because
Right.
The reality is if you get 5% of your time back, 5% of your time is worth a lot of time. Like I am the psychopath that you just described that works those hours, but like 5% of my time in the work week is, it's 5 hours a week. So like to me, if I were able to get 5 more hours to be productive, it's a big, big deal. So like, I think setting the expectation at 60% is like, maybe one day they develop into that person that can do 60% of what you do. But if you set the bar low and say, I just want to free up 5% of my time, your time is worth so much money, and the return on your time in your business is so high that it's worth investing, that money in the salary.
Now take that one step further, right? So everyone here, their highest and best use is originating, or maybe it's putting the file together if that's your position, or structuring the loan. Maybe you're a green personality versus an orange, or maybe it's business development. Own who you are. Like, don't go out and go, you know what? I'm gonna read this manual on how to design a website, and I'm gonna learn how, because who gives a shit about that? Why do you want to get in the weeds? Like, for what? Is it just fun to educate? Okay, fine. If you're committed to being like that, and you don't want to outsource something to an expert that's good at something that you don't even know, then this is just a hobby. But if you want to build a scalable business, a legitimate scalable business, you don't have to know everything. You don't have to do everything. You don't have to get involved in everything. And you have to give up control and trust that you're right. You probably, like I know Ramon Walker, if he wanted to, he's smart enough. He could go learn how to develop and learn how to code and get in the weeds and really get involved in all the meetings as it relates to building his Salesforce platform. But why? He's going to rob his time with his children, rob his time from coaching other originators, rob his time from searching for the best algorithm to be able to get the best leads to come through. Hire someone who's good at it. Hire the experts. This control freak attitude that people have as single small business owners, you got to just let go, or else you're not truly committed to scaling. And that's the big knock on the wholesale channel, is you can't scale. And you know what? You damn well can scale. And the biggest enemy is your own mindset. You have to make that leap into being that 20% where you give up control, you hire people, you trust that they're going to do a good enough job, even though you know that you're the best at what you do. You can't do everything. You just can't do everything. So you have a lot of small business owners that have to get over that hurdle. That's the one thing you have to get over to scale your own business.
Well, I think you know, and people aren't going to want to hear this, but just the truth is the truth. You know, when you think of the Quicken business model, like they basically have proven that they can hire somebody out of college, and after 8 weeks of training, put them on the phone, and that person can actually close more business in their first year than the average loan originator. I mean, they can, because they got all these consumers coming in. So the question becomes this, is like understanding that you put a high value on your expertise, but your expertise is not applicable on 100% of your business. Like at the end of the day, 20% down, 740 credit score, 30-year fixed bar, like there's certain borrowers that like they are just, you know, that cookie cutter transaction that doesn't require this unbelievable expertise. And you have to start building your business to put yourself in a position where even if you just have somebody that's helping you with that, or database management, or, you know, processing assistant, like you have to start immediately. And you have to look at hiring the way that, you know, I look at hiring. Hiring is not an event. It's something you're always doing. You always are getting better. Like you might have a superstar processor, but why not have 4 of them? And a lot of people don't look at it that way because of fear of, hey, if I hire them, then I got to go give them business. I'd rather like make that one processor work really, really hard and burn them out and, you know, and put them in a position where like we can't take on more loans and go actually have depth. And the truth of the matter is, and I've seen it, is if you bet on yourself, PRMGs bet on themselves. They've obviously grown every year by double. You know, we've seen it with brokers across the country. Wholesale channel's gone from 7% to, you know, we're at 20% now. Everybody's growing because they bet on themselves. Now it's taking to that next level of saying like, bet on yourself by taking on that new hire, by taking on that LOA, that processor, that's going to help you do more, or by signing up with Verse to help do some of the customer or database follow-up. It's making those investments in yourself. And you know, the brokers that do it, and you've mentioned a couple of them on this call that are investing in the future, they're the ones that are going to win in 2021 and 2022. And I think that it's a very important realization that I had after 2016 was, hey, you know, we spent all of our time on refinance. We spent all of our time on closing as many loans as possible. We didn't spend enough time on developing talent. And when we got to 2017 and business slowed down, we really took the whole year to focus on let's hire, let's train, let's develop our depth. And when you do it, every single time it works out. And I would be willing to bet on anybody that actually takes that approach.
I agree. I mean, you know, it's one of the things that, you know, when I am at trade shows and I watch the different speakers, one thing that Ish always says is, you know, he's like overhire. He's like, you know, hire ahead of the curve. You know, he always talks about hiring, you know, more than you need. And it's like if you build it, they will come, you know, and not, you know, not every business operator thinks like that, or lender thinks like that. Certainly banks and hedge funds don't think like that. You know, they manage by, you know, the spreadsheets, the nickels. But the thing is, right now, everybody is winning. So if you're not winning right now, you know, you need to find out why you're not winning, because this is the time where everyone should be winning big time, 2x for sure, if not 10x. And then how do you then, you know, scale? How do you hire ahead of the curve and have that leap of faith? Maybe you don't want to invest 10% of your money in marketing dollars. Maybe you want to take some of that money you've saved up on your P&Ls and you want to invest in a processor when you may not necessarily need that processor right now. Like you said, you know, hire ahead of that curve, you know? So I think that's very important. It's a good point. Not everybody acts on it. Not, it's hard. What do you do? Like when you hang up on this call and you're done, what do you do when you go back to your corner? And I used to get so wrapped up in email. I would just sit there. We have 2,300 employees. You think I don't have something to do? I could pull myself down into anything, any team, any loan, any transaction. I could kill my time. And so I time block now, right? So I time block my time. I do a certain amount of time where I'm answering my emails. I try and be there at the ready. I used to think that being absolutely at the ready to pick up the phone or answer the email the second someone gets to me, that was my value proposition. And when you scale a business, that is not your value proposition. And so it took me a while to get over that hurdle. And so what do you do when you get off this call? What do you go back to? What is it that's on your mind right now? Because whatever that first thing is you think that's building up the anxiety because you just spent an hour with us on this call, whatever that is, that thing is what you have to find a way to break up and delegate and scale, because that's what's going to give you your time back to really build a business that's sustainable and growing, because we're not stopping, especially the purchase business. This purchase business is going to absolutely take off. It's not going anywhere. Our population growth is there. There's so much pent-up demand. There's pent-up money on the sidelines. I talk about all these trends that are going on right now, on my LinkedIn videos. And so I appreciate those that watch and comment. I really do appreciate that. That's good content. That's just for everyone. That's for us, local experts and local originators, to fight fintech disruption. That's for you to take back and say to your client, I don't care if you send this alone ever. I really don't. We're doing great. I want you to be armed to fight, because I look at this, like I used to say this like a year ago, like winter is coming. I mean, it's coming back, So not only is this virus here, but fintech disruption is coming back again. The consumers are choosing cheaper, better, and faster. There's one thing that Amazon has told us is you can get all three. And Amazon, trust me, Amazon is in our business right now. They're in our business right now. They are giving data to certain people they've chosen to win. We got to fight that too. And so there's a lot going on out there against us, the local experts. So I look at all of us aligned. Anyone that's a local, independent mortgage or real estate expert, we're all fighting that fight together against the freaking army of the dead techies over there in fintech.
Yeah, I mean, you and I know that
our enemies varies. It varies who our enemies are, but
it does vary. So we're going to wrap up. KP, one last message for the broker community. One last message to everybody that's listening. What's your sign off?
Well, I just want to say that, we're very committed to getting our turn times back in line. We're committed to, all originators. We have a saying here, built by originators for originators. And just the difference for that, it's not just some BS slogan we made up. The guys that found our company, Paul and Robert, they literally did your job. They get it. So when we think of things to do here, it's to make it better for the originator. Yes, we have a portfolio. Do we look at our portfolio like that's our asset? We have to protect this asset at all costs and retain it no matter what. We're willing to do away with our asset if it serves the originator better. So there's only 4 of us that own this company. We're doing great. We're not greedy people at all. We're all humble servants. We eat shit sandwiches in the trenches every day with all of you. So we're not backed by a hedge fund. You know who we are. You know who our leadership is. There isn't some CEO that works for us that's never done a loan in his or her life that has to answer to a hedge fund that you'll never see, or a bank. You don't know what they're thinking. We're thinking about you. We're thinking about you. We're not perfect. We're busting our ass to get better every day, just like you are. And we're all in the same together. This can be the best year of our career. Next year is going to be even better. Let's go crush it.
Absolutely. Well, thank you, KP. We appreciate your time. Thank you all the brokers that watched this week. Looking forward to seeing everybody next week for the weekly sales meeting. Have a great day.
Cheers, guys.